Hello traders, hello everyone, my name is Horvat and welcome to a new free video here on TradingView where I will give you just a brief outlook on Euro and the US dollar in connection with higher yields that we are seeing recently. So volatility also is seen on the FX markets, and we definitely want to know where the moves are coming from. And for the euro dollar pair, there's always very important to keep an eye on the 10-year US yields in connection with the German US yields. Okay, the difference between these two will actually impact the euro dollar. Now, if the US yields will move much faster to the upside than the German US yields, then it means that investors and traders are more interested in the US dollar, and that's why we are seeing the US dollar recovering for the last few weeks. What is very significant is that if we look at this spread between German and the 10-year US yields, is that this recent reversal regarding higher yields in general came away from this trend line, the major trend line that I see it connected back from 2008 financial crisis. So this actually suggests that if this difference will continue, if the US yields will continue to rise faster than the German yields, then it means that US dollar could recover even more in the future. And what I think it's very significant and important is that euro dollar is also at the moment at this trend line, potential resistance. So if this market, if US yields will continue to see more upside in the future, then of course I would not be surprised here to see euro dollar even moving even lower. Also, if I compare here back to June of 2017, when July actually, where we have seen a reversal to the downside when the US yields started rising much faster compared to the German yields, the euro dollar then found the top approximately 6 to 7 months later. And this, in fact, is now very similar fractal. Okay, again, here we have seen a top in April of 2020. Okay, and then we have seen a top so far in January here on euro dollar. And if this US yields will continue, even maybe to accelerate to the upside, if the Fed will not be able to fight these moves, then I think that the euro dollar will see more weakness. However, I'm a little bit more careful when it comes to US dollar bullish trend, because from a technical perspective, especially when I'm looking at this US dollar index chart, where there's still actually a downtrend. So we have to be very, very careful or very selective when we decide against which currency we will buy the US dollar. So here I'm actually looking what is going to happen in the next few, let's say in the next 2 weeks or so. Okay, why? Because after all, no matter what I'm saying there on regarding the yields, well, we are still seeing these pullbacks very similar, okay, compared to the previous one. So maybe we are approaching some resistance here. That's why I'm saying that the next 2 weeks will be very important to see if these resistance levels, especially when I look back here from August lows here, if we are going to keep moving higher here, maybe even an extended leg like a wave 3. As you know, I'm Elliott wave guy, so I really like to track and keep an eye on the personality of the price action. So if we will see an extended move to the upside, let's say towards 94, then this would be quite important evidence for me that yes, the US dollar has bottomed here and that we are headed much, much higher. But so far, it's still a little bit early to say that that's going to be the case, because after all, this can also be a free wave movement to the upside. Okay, so if we'll see a reversal by the end of the week, maybe back below or back towards 90.50, 90.60, then I think that dollar weakness will remain in the cards. If we will just continue straight to the upside with an extension higher, then I think that these US yields are going to see also more upside, and the US yields could rise much faster than German. Then of course I would be interested to look for more euro dollar and potentially opportunities on pullbacks. But at the moment when the US dollar index is trading at the resistance, when the euro dollar could be trading at potential support, I don't want to look at the euro dollar. Okay, it's still currently, for the last week, 2 weeks, US dollar is still strong. So if I want to participate in the current environment, okay, then I will not be looking at the euro dollar, but maybe rather at the currency pair where I see much more powerful moves, and this is probably dollar yen. Okay, so looking at the dollar yen here, what is going on? Well, we have very nice and overlapping structure here. I believe it was maybe a WXY correction, and I have been tracking this pullback for a while, and also said that this at the end here was possibly a wedge formation that made this or caused this very strong reversal. As you know, those wedge patterns normally occurs at the end of the trend, so I'm not actually surprised to see significant change in momentum here and in direction, of course. And what we are seeing at the moment is that dollar yen obviously is much higher than dollar index. Okay, so if I want to trade, I know which pair to trade. I want to look at the US dollar against the Japanese yen because it's a very strong pair with a lot more upside potential. Why? Because if this was a corrective decline, then we know that price can be headed back to the starting point of this decline, which is actually here at March level. So as you can see, there is still a lot of room for more upside after pullbacks. And if we look at the substructures here, I think we have a very clear pattern. Always when I'm trying to label the wave counts, I firstly try to look at the extended lag or at the sharpest wave in the very short period of time. And this is clearly the case here up from February 23rd levels. So if that's the strongest wave, well, then maybe we can assume that this was wave 3. So I would label probably like that. Wave 1, wave 2, now you are in a wave 3. You would expect wave 4 and more upside after pullback into wave 5 later. So why labeled wave 1 here? Well, because wave 1 is also a motive wave, okay? So it should be made by 5 subwaves. So I will look now and label this in 5 subwaves here, okay? And I will make this, let's say blue. Okay, so we have here 5 waves up for a wave 1, and then wave 2 pullback back towards the previous wave 4. Not such a deep pullback. Normally you will see 60 or 50% retracement compared to wave 2, but markets are not always textbook. But this is something else around this message. Actually, if you're not seeing a very deep pullback, okay, it actually suggests that yes, bulls are extremely strong because bears cannot even take price towards 50 or 61.8%. So if I attach the FIB also for you here, the 50, we don't need this one. Okay, and you can clearly see that we came only down towards 38.2%, still far away from this 50 and 61. So actually that suggests that market is very, very strong because bears have no chance to take us for a deeper pullback. And since we are seeing a very nice and strong move to the upside, I think that this can be actually maybe a break out of a base channel here. You're now in a wave 3, so watch out for a pullback into wave 4. And the only question is when this pullback will occur, but I think that once we see a pause here, pause can clearly be identified when we see a little bit slow price action in a tight range. Then I think that there will be opportunity to catch this wave 5. Of course, invalidation level should be at 106.20. So as long as we are trading above that levels, I think that US dollar against the Japanese yen could be very interesting for more upside here. Okay, traders, thank you very much for your attention. I hope that you enjoyed this video. Please leave me maybe a reply in the commentary below. Bye.